Hello, everyone. This is Stephen Richardson, and today we're going to be doing a semiconductor industry quality check. I'm doing this in the month of February 2024, just so you know the timeline, whether it's relevant or not, if you're looking at this a couple months later. Um, we previously did an industry study of semiconductor materials and equipment. They're very similar industries, so I feel it's prudent to do a check of both industries before purchasing a stock from one of these industries. So let's move over. Here's the disclaimer. This is for educational purposes. It's not for financial advice. Nothing in here should be construed as financial advice. Okay, so semiconductors. So there was about seven of them, I'm pretty sure. Uh, there were I eliminated Texas Instruments and Qualcomm and Intel because sales were lower than the expected 5 to 7% for large companies. I eliminated AMD because their data was radically high, price earnings ratios, and the R squared was almost zero, which means it's just not a good stock to look at, for value purposes. So here I've snipped the business descriptions for TSM, Taiwan Semiconductor Manufacturing Company, and which one is this? Broadcom and NVDA. That's what we're going to be looking at for quality check. And then if it passes the quality check, we'll be looking at all three of these for judgment, but they've got to pass the quality check first. Okay, so Taiwan Semiconductor (TSM). So as you can see, I snipped. Green is sales, and pink is pre-tax profit, and blue is um, earnings per share. And you can see that it says 2018 sales. Well, it just happened to be that my cursor was there and it popped that up. So it's not really important in 2019. So it just happened to pop it up there. And you can see the vertical bars are the highs and lows during that year. And you can see it steeply climbed and then went back down a little bit and it's on the rise. So sales increasing up, yes. Sales and EPS growing consistently um, at a consistent rate, which means straight, more or less. There's a little bit of chop, but it's not radical. Um, Sales and EPS growing steady, parallel. Yes, they're definitely parallel. So growth 5 to 7% for a large company. Well, this has a 10-year average growth rate of 13.5%. So yes, recent growth been flat. Uh, recent growth it went down from 22 to 23. So, but that could be uh, a little bit of chop, as I would say, and we're going to have to see what the next couple quarters look like. Sales recent quarterly growth in line with historical? No, unfortunately not. They were down 1.5% versus the 13.5%. We'll need to find out why. Earnings per share, that was down 20.5% recent quarter versus 15.8%. So unfortunately, no, we're going to need to find that out. Okay. So pre-tax profit, even or increasing? Yes, it is. As good as competitors, 24.8 to 9.6. Yes, I snipped the competitors down here below. And then trending down for AMAT and even for ASML. So it's 42%, 42.2% profit margin. That's a really good profit margin. It really is. Okay, return on investment. Is it even or slightly increasing? Well, no, it's downward trend. Significant changes? Not really. 2023 so far looks down. Is it greater than 15% return on investment? Yes, it is. Okay, and their debt less than 30%? Yes, it's in a downward trend too. So that's good. Significant changes? No, I don't see any significant changes. And TSM has less debt than its competitors, so that's good. All right, now we're looking at um, AVGO. Its growth, sales increasing. Yes, sales and EPS straight. No, not straight. Besides the chop, you've got that blip in 2016 where it fell. Either parallel, mostly ish, except for that chop in 2016. Growth 5 to 7%, yes, that's a 23.5%. Um, recent growth been flat? No. Sales recent quarter growth in line with historical? No. Earnings per share in line? No, not. Um, so it's got some high growth, that's for sure. Um, so, and if you look at these prices, the highs and lows are not much of a difference, but it is steadily increasing. The So that's not a concern. So let's look at the pre-tax profit. Is it even? Yes. Um, Broadcom is even. Jumped up between 2020 and 2021. Is it in line? Is good or better? Yes. Um, competitors are trending up as well. 42.1% is an excellent margin. I'm not going to lie. Return on investment, most importantly, greater than 15%. Yes. Is it even or slightly increasing? No, but greatly increasing. It's really good increase. Significant changes? Yes. 2020 to 2021 probably needs to be investigated. And Broadcom's debt, are they less than 30%? No, they're 62.1%. That is alarming, and it's almost twice the industry average. And this is a reason to disqualify this stock right now, to no longer look at it. So we're going to move on. All right, NVIDIA growth. Look at that. That's beautiful. Those lines are beautiful. A little bit choppy, but they're going up in the right direction. So sales increasing, yes. Even the quarterly sales increasing. Earnings per share consistent. This is straight. A little tiny bit of chop, but yes, straight. And there's going to be some radical growth in this year. Um, sales and EPS growing steadily, parallel. Um, Yes, they are parallel, definitely. On growth, 5 to 7%. Yes, 24.9% for 10-year growth. That's good. Recently been flat? No, sales haven't been flat. Huge jump? Yes, it's a huge jump. Nvidia's been in the news. The EPS, a huge jump. So that's crazy. All right, we're going to take a look at pre-tax profit. Is it even or increasing? Yes, a little dip in 2022. How about its competitors? As good or better? Yes, on the pre-tax profit. Competitors are trending up as well. 27.9% profit margin is a decent margin. It is. Return on investment, is it greater than 15%? Yes, and better than the competitors. Significant changes in 2020 and 2021 needs to be checked out. Okay, let's look at their debt. Debt less than 30%, 2022 was not. However, the 5-year average is 26.5%. So we're going to need to look at, and it's hovering the last 3 years at just above 30%. So this may be a cause for concern if it keeps trending up. It is a cause for concern. Servicing the debt with interest. We'll need to take a look at that. But definitely, NVIDIA is something to consider. Okay, Broadcom is disqualified due to excessive debt to capital ratio. So that leaves TSM and NVIDIA to look at, and we're going to be looking at that in the next few days. Thanks, and hang in there. We're going to be finishing this the next couple days. We'll finish this study. Have a good one.